This is DT Discovery, where ambition meets reality. We go beyond the headlines to dissect the rise, the hype, and the crash. If you're into deep dives that challenge the narrative, subscribe. At the turn of the millennium, a tiny Canadian company set out to do something extraordinary. Build the world's most ambitious fiber-optic network and become the backbone of the internet. With billions in capital and a bold vision, 360 Networks was the talk of Wall Street, Bay Street, and Silicon Valley. But in less than 2 years, it all came crashing down. This is the story of 360 Networks, the dot-com darling that couldn't outrun its own ambition. .360 Networks didn't start with a Silicon Valley mogul. It began in 1998 as Worldwide Fiber, quietly backed by Canadian construction money from the Ledet family and Jerry Tharp. Their idea? Lay thousands of miles of fiber across continents, an invisible backbone for the internet age. By 2000, the stakes were higher, and so were the ambitions. Enter Greg Maffei, Microsoft's former CFO, Wall Street insider, brought in to take this quiet telecom upstart and turn it into a global juggernaut. The vision? A seamless fiber-optic network carrying voice and data at speeds the world had never seen. And in the late 90s, that wasn't just bold, it was revolutionary. The internet was exploding, bandwidth was gold, and everyone wanted a piece.
In January 2000, 360 Networks went public. Its IPO was one of the largest in Canadian history. Valued at over 13 billion Canadian dollars, they were laying over 56,000 kilometers of fiber across North America, under the Atlantic, all the way to Asia. They weren't just building infrastructure. They were buying companies, amassing dark fiber, and feeding a market that couldn't get enough bandwidth. But beneath all that optimism was a dangerous assumption that the future would arrive exactly on schedule.
By the end of 2000, the cracks were showing. The dot-com bubble was deflating. Startups failed, investors vanished. 360 Networks was bleeding cash, with $2 billion in debt, and too few customers using the vast network it had built. The world didn't need that much bandwidth. At least, not yet. And Wall Street was beginning to panic. Then came 2001. Markets collapsed, and the telecom sector was hit the hardest. WorldCom, Global Crossing, Nortel, all in free fall. And in June 2001, 360 Networks filed for bankruptcy protection, just 18 months after its IPO. It was one of the fastest and largest collapses in Canadian corporate history, from $13 billion to nearly worthless in under 2 years. So, what happened? Was it bad timing? Greed? Or was 360 Networks simply ahead of its time? The truth is, it was all of the above. They built for a future that hadn't arrived yet. Their network was real. Their vision, technically sound. But in business, vision without patience or profit is a dangerous game. After emerging from bankruptcy, 360 Networks restructured its operations and began selling off its assets. In 2004, it sold its Canadian business, including Group Telecom, to Bell Canada for over $200 million. And by the end of the decade, most of what remained was eventually absorbed by Zayo Group. Its grand vision didn't vanish. It just changed hands. Today, those very cables laid by 360 Networks still hum with data. The story of 360 Networks is not just about failure. It's about ambition unchecked, hype ungrounded, and the brutal speed of tech capitalism. A company that tried to connect the world but couldn't keep its own house from collapsing. Today, what remains of 360 Networks lives on in pieces, absorbed by other giants, buried beneath cities, oceans, and forgotten IPO charts. Its failure wasn't just about business. It was a mirror reflecting the illusion of endless growth and the cost of believing your own hype.
Thanks for watching DT Discovery. If you found this story insightful, subscribe, like, and let us know in the comments. What tech giant do you want us to investigate next? Because sometimes the truth is buried under billions.